Do you remember the Buffett quote, "Be fearful when others are greedy and greedy when others are fearful"? Well, think back to the bottom of the recent market sell-off in mid-March. At that time, the markets were crashing and the Fed was about to announce unlimited quantitative easing. At the time, there was blood in the streets. So, who was buying in the markets? As we know, it wasn't Buffett. And today, when the markets are near all-time highs once again, who is selling? Well, it's the same group of people. So, let's take a look. So, the group that was buying when there was blood in the streets and the group who was selling near the all-time highs were corporate insiders. At the time, when many hedge funds were panic selling, corporate executives, who likely know their company prospects better than just about anyone else, were acting like they should. The corporate insiders were buying stock that was on sale like they were at a clearance sale. The corporate insiders were buying shares of their own companies at what Bloomberg called a breakneck pace. As indicated by Bloomberg, the total insider buys outpaced insider sales by the most since 2011. The insiders were scooping up shares at the fastest pace in 9 years, while stocks plunged into the fastest bear market on record. Although not a perfect record, this table shows that the insider buying tends to spike when the markets tank. This was again shown to be apparent in the mid-March low of 2020. It was a nice time to buy, and the corporate insiders knew what they were doing. But now, we're about 4 months removed from the market low. We have the S&P 500 back to just a whisper away from all-time highs, and the tech stocks are at levels that we've not seen before. So, at the highs of the market, what are the corporate insiders doing? Well, according to Bloomberg, the corporate insiders whose buying correctly signaled the bottom in March are now mostly sellers. Bloomberg reports that nearly 1,000 corporate executives and officers have unloaded shares of their own companies in July. The selling in July outpaces insider buying by a ratio of 5 to 1, which is data compiled by Washington Service. Looking at the chart, and perhaps difficult to see, only twice in the past 3 decades has the sell buy ratio been higher than now. According to Bloomberg, the data from InsiderInsights.com showed a similar trend. Reportedly, over the past 4 weeks, companies with insider selling have outnumbered those with buying by 186%. According to Jonathan Moreland, Director of Research, this level is near the 200% level that tends to signal short-term market tops in the past decade. The data from Washington Service shows that during the month of July, fewer than 200 corporate insiders have bought shares, compared with a full month average of 1160 during the first half of the year. Although the chart looks compelling, don't read too much into insider sales because there are many factors other than valuations that can influence insider actions. I think it's best to look at the data as a caution sign, one that we need to pay attention to, but rather than selling stocks, perhaps use this point in time to shift your portfolio to a more defensive position. And for today, that's ChewDog Charts. Thank you.